All right, how you doing? This is Robert Doc Reid, and I'm a certified ABS advisor. I'm here to talk to you about the private banking blueprint, and really what we're able to do for those who are serious about transforming financially and getting free by creating independent wealth. So let me ask you a real quick question. Would you turn down $2 million? Well, if you remember when The Lion King first came out by Disney, Jason Weaver actually was offered $2 million as the voice of Simba, singing all those songs, right? And he actually turned it down because when he was doing the role to voice Simba in The Lion King, the flat fee of $2 million was something that most people would have jumped at, opportunity of a lifetime. But instead, he asked for royalties. And by that one decision, he ended up with $100,000 up front, but has more than made up for turning down the original offer. And he earns passive income to this very day, over 20 years later, right? Well over $2 million that he would have made if he would have jumped at the first offer. Now, I saw an interview with Jason Weaver, and he discussed that his mother was actually in the industry, the music industry. And so she was very familiar with how the people who control the contracts and the record companies, how they would exploit artists. And so, knowing the business side of show business, she was able to advise her son based on logic, facts, and experience, right, about what would be the best financial move to make. And that's really what we want to talk about because the value of education can never be overstated, and the dangers of ignorance can never be overestimated. Did you know that ignorance is a $1 billion industry? Literally. So, specifically, it's not just dollars and cents when we're talking about people in our community, because as you know, in our community, they say, look, more Black people die from heart disease than anything else, right? Well, what causes heart disease? Heart disease is actually caused by acute and chronic stress. So, acute stress is actually not a bad thing, right? You may have a stressful situation, but you're able to bounce back when those circumstances change. Whereas chronic stress is stress that is consistent and prolonged over a very long period of time. Gives you no opportunity to recover, right? And if you understand, growing up as a Black person in this country, you're under stress constantly. And so there's no wonder that acute and chronic stress is actually the number one cause of heart disease. And if that is the case, then it's more than just dollars and cents for us, right? This is the battle of our lives. And what we have found is that many of the stresses, the acute and chronic stresses that we face, can be tied to debt, right? And we actually over here at ABS look at debt as financial cancer, right? And so when you really do your own due diligence and look at debt and how it really impacts us beyond the affordability, beyond the payments and all that type of stuff, but the stress that it causes in failed relationships, and parents not being able to parent their children, missed opportunities because we have mortgaged and traded our future time and options for the pleasures of what we could not afford today. And so we get shackled to debt. And the worst part about that is that if this debt is the number one cause of acute and chronic stress, then that means that debt is the number one cause of death in the Black community, right? And that's what we're here to talk about. The debt ain't no blessing, right? Smart people will understand the little picture in the bottom. We're excited about the stimulus, the free money, and all that type of stuff. But wealthy people know that they own everything from a platform system standpoint. So if they give a little money here, the poor people are just going to give it right back to them. And that's the way the economy works, right? Debt ain't no blessing. It's a ticking time bomb. And we're here to make sure that we diffuse that time bomb in your life and show you how to win and create independent wealth. So, one of the things that is very, very important to understand is what game are you playing, right? And if you think about it, we talk about there really only being three teams that you can be in financially, right? And the number one team that I'm going to expose today is the team of the banker, right? So just to give you the three teams, you have the banker, the producer, and the consumer. Now, I don't have to tell you about the consumer because chances are we've already been conditioned to be excellent consumers, right? That's why we don't think twice about going and getting a credit card or a mortgage or a personal loan or a payday loan or whatever else we can do to get ourselves in debt just to make ends meet, right? And then what we do see is, the brilliant and creativity in our community. You got a lot of people who are hustling, right? They know how to go out and make a dollar, flip that dollar, right? But the thing about that is the producer who's creating our opportunities, that entrepreneur, um, the consumer and that producer have something in common. They both rely on getting their funds from the banker. Now, what they do after they get those funds is very different, as the entrepreneur is looking to create opportunities to sell something to the same consumer and then keep the profits above and beyond what they are expending so that they can have a winning situation. The problem with that is, what if the plan doesn't work and things go left? They've over leveraged themselves and don't just have regular debt, they can have huge debt that they have to dig themselves out of that debt hole just to get back to ground zero, right? But have you noticed how the banker is benefiting from the consumer and the producer? So the banker, how did they get rich with no money? Because legally, banks, when people come together, and believe me or not, banks are actually ran by families who came together, pooled their financial resources, got a charter, created a reserve, and then opened up a bank, which is nothing more than a business. A bank is a business. So we have to change the way we look at banks. A bank is in the business of money and convenience. And so they create bank products, and bank products allow customers to give our money to the bank. And it is only once we give our money to the bank that they can begin to do what bankers do best and flip the money, make the most out of the money that we gave them. And they turn around and give it right back to us in terms of um, mortgages, in terms of car loans, personal loans, credit cards, checking accounts, savings accounts, CDs. Say, I can just go on and on and on. All of those are bank products. So think about what happened in 2020. 2020, right? It was a wake up call. So when you look at the pandemic and what's going on, we look at how before the pandemic and the Rona, the minimum that you needed to get a FHA loan to buy a home, which really is a mortgage, was a 580 credit score. Now, a 580 credit score is not good because the scale goes all the way up to 850. But with the poor 580 credit score, FHA would be willing to fund you a loan if you would put 3.5% to 10% down. So what does that mean? If it's a $100,000 property, you could come with $3,500 or $10,000, and you can go ahead and get that loan. Now, after the Rona, right, getting a house post COVID, the minimum score is now 700. So looking at Chase, which is my bank, they've increased the standards to indebt yourself. But now, not only do you have a better credit score, which lets them know that you will pay back the money after you borrow it, you got to come with 20% down. So now that same $100,000 property, if you get a mortgage, you're going to have to come with $20,000 to even get the other $80,000 to get it. Now, as I just described the three teams, I want you to understand that the banker, the greedy banker, is not your friend, right? They are taking none of the risk and they are getting all of the upside and all of the rewards, right? So that's only one of the four thieves stealing your freedom. And we do a great job of explaining and educating you on how you can watch out for the thieves that are stealing your freedom. And the other three would be Wall Street, right? And if you paid attention to the GameStop situation where, the people, the small and retail investors were able to figure out how to beat the hedge investors and cost them billions of dollars while they made money. And then again, wealthy people own the platform and the house doesn't lose. So they shut the platform down before people could really take their profits, right? That's all Wall Street. And then the government, right? The way the government works, the government does not create anything. All the government does is extract money from the citizens, right? And then they dish it out. So when you're getting stimulus checks and all this type of thing, you have to look at what strings are attached to it. It's just your money anyway that they're giving back to you because the government doesn't make anything, right? And so now Biden is talking about changing the tax rate and doing a lot of different things. And then people are also looking at, different plans that we have from the government. But that's one of the things that is stealing your freedom. And then, of course, you see at the top, it says ourselves. You got to look at the mirror and do the work because you have to unlearn and relearn that you've been fed lies, really, that are not benefiting you financially. It's benefiting everybody else but you. So, why most families struggle? Well, most families struggle because of procrastination, right? Number one is daunting. I'm going over debt and how it's linked to being the number one killer in our community, and then all these other enemies that are coming at us. And like, man, we just gotta. All my life I had to fight, right? We thinking of the color purple. But here's the thing: procrastination will keep us from taking action to change that narrative because you do have the power to change. And so, what do we look for? We're so tired of fighting that we're just looking for instant gratification. Easy. If it's easy, it's sleazy. But look, we want what comes easy. If there's a lot of work, a lot of steps attached to it, we don't want to do it. Living beyond your means. Most families are struggling because they're not paying attention to really living within their means or under their means so that their money can work for them instead of them working for their money. And then making decisions based on emotions. Guys, there are college classes that talk about this. There are books written about this, but emotions, we all have them, but you have to rise above your emotions and make good decisions that are going to benefit you in the future. And then five, easily influenced. I mean, you think about the fact that they tell us um, in our urban communities or whatever, in our hoods, it's depressed, there ain't no money there. Well, if there's no money in the hood, why do we see so many immigrants coming in and setting up shop, running the gas stations and the convenience stores, the bodegas and all that type of stuff, right? Because there is money in the hood. When you know that people are easily influenced as consumers, you can go suck up all those resources and dollars, right? Which basically is just access to the wrong information. So this is why I say we have to disregard conventional wisdom, and we have to understand that we can think like the banker ourselves, and we can begin to change our financial situation. So one of the things that you have to understand is, where does money go, right? Now, the bank, after you do the math and count all the costs, 34.5% of every dollar that you bring in is going to be eaten up in finance charges, right? Those are the interest rates that we're paying when we have conversations about, oh, I can afford this or I can afford that. How many payments, right? They make it affordable to us. And then the government is taking another 36% in government programs and then state taxes. So that leaves us with having to live on 29.5% of every dollar that we bring in, right? Absolutely crazy. Now, one of the things that I want to do. All right, so what's the next thing that we have? So when we're looking at what we're up against, I just want to give you an illustration because men lie, women lie, but numbers never do. Okay, so if you have a goal to save $1 million, I want to break it down to you to let you know what it looks like on a monthly basis, what you have to be putting aside in order to make that money, right? So if you have time, which is one of the greatest things that we can do for ourselves, you'll be able to hit that goal over 40 years by saving $286. All right. So if you take away 10 years, that number jumps from $286 up to $671, right? Every single month. Now think about your budget right now And do you have an extra 300 to $600 in your budget that you could put away that you don't need right now to live on? For most people, they have to live on that money, right? And by procrastinating, we're making it harder on ourselves because it just gets outrageous at the point where if you're 20 years from retiring, right, and needing some income, now you have to put away $1,700 every single month just to hit that goal of $1 million. And when you're 10 years out, look, I know that the older you get, the better you get at what you're doing and the more money that you theoretically are making. But with 10 years to your goal of $1 million, if you only have 10 years to do it, you got to put away $5,466, right? Most people just look at that and it's easy to see why procrastination, all those other things were set in. So again, disregard conventional wisdom because I'm going to show you how you can meet all these goals and then some without going into debt. Now, why a few families actually succeed? Well, number one, they're proactively working at meeting their goal. So that assumes that you have a goal, financial goal, you have something that you have a high priority in doing, and every day you're proactive at working towards accomplishing and reaching that goal. The second thing is future planning. Where do you see yourself in the next 10 years? Are you just winging it? Or do you actually have a plan that you can execute to get to your destination? And then creating a surplus income, right? Again, after watching this information, I don't want you to look at money the same. Money is a tool, right? And that tool is supposed to benefit you and serve you, not the other way around, okay? 4, making decisions based on facts, research, and logic. You can go research everything that I'm talking about, but then the number one thing is you have to stick to the plan that you execute by accessing the right information. And that's why ABS brokers are here providing the right information so that you can take action on it. Now, I'm going to go into detail with this, but we want you to succeed. And if that is a goal that you have for yourself, then definitely want to take notes and get back with the person that shared this information with you. Now, rich people plan 10 years ahead while poor people plan for Saturday night. Like a while ago, I heard that most people will plan a vacation. They'll spend more time thinking about a vacation, where to go, what to do, what memories to create. They'll spend time and energy doing that. But if I ask them, when are you going to have $1 million in the bank? When are you going to be financially free, independent, debt free? What are some of your goals? We don't think about that, right? People brought up poor and middle class inherit beliefs of the poor and the middle class. And we're here to break the mindset and take a new path. One of the things that we want to change is money. Most people really don't know what money is, but we need to understand that the money that we have, quote unquote money, is actually currency. We have currency, fiat currency, and you can Google that, fiat currency, and do your own due diligence. But when you break that word down, the cur literally means run, and NC means consistently. Money is supposed to run consistently like water. This one thing, if you understand how to incorporate this in your life to create an ecosystem with your resources, it will change the game for you. Because just like here in the world, in nature, we can look, we have groundwater here, and we have lakes and oceans and streams. Well, that water is evaporated, goes up into the air, and in its cycle, right, condensation will cause it to begin to precipitate, and we have rain, and it comes right down as surface runoff back into groundwater, and that cycle starts all over again. Well, money is supposed to flow much like the water cycle. So what we teach is how you can create your own money economy, right? Well, at the top, you earn money however you earn it, whether you have a job, a W-2, or whether you are an entrepreneur, a hustler, 1099, or you inherit it. When you have the money, the first step is to save the money, right? And I know we all know we're supposed to pay ourselves first, right? But the truth is, not many people do it. But here's the proper cycle, the proper information, the right information. Earn money, then money is saved, then money is lent, then money is spent on expenses, and then the money is returned to you and creates that whole cycle all over again. That is what private banking blueprint is all about, implementing those steps in your life. And we can take it a step further and actually show you how you can reallocate your current financial world, put in a little bit of work in the right direction to cover everything that's going to happen in life. So this is an example of me and my wife work. We have some things that we have planned. We have 4 children. And then of course, some of those things that life just happens financially. We plan for those things and we have a way because we are planning it. We have cash surplus and reserves. We're able to meet the things that are coming up without taking on debt and without mortgaging our future and eliminating our options. So how is this a real world? And as I wrap this up, you can become your own bank. Now, on the left is my old 2013 Town and Country. I bought this car because, again, I have 4 children and life is busy, right? So I needed a minivan. I love my Town and Country. We paid it off. And after we paid it off, I've had it no car note for probably about 4 to 5 years. Now, here's the crazy thing. There was a situation where I had a gig that required a lot of my time, right, all week, and so I had money, but I didn't have time, right? Oftentimes you have money or no time, or you have time and no money, but rarely do you have both of them. Rarely do you have both of them. So with this situation, the van went down, and I needed reliable transportation to get to the gig that I was working at the time, right? And so what did I do? I took some time off. I went to go car shopping. I needed something dependable, needed something nice, big. We got a family of 6. So we found a beautiful vehicle, the Subaru Ascent, 2019. Had a third row. I'm like, oh, okay, Subaru, I see what you're doing. It's dependable. These things go 300,000 miles. Anyway, long story short, we're sitting down with the salesperson, and the conversation immediately goes to what they're trained and conditioned to talk to us about is payments. What's an affordable payment for you? What option works for you? And I'm telling you guys, I'm gonna be honest, when we were having this conversation, I looked at the gentleman and I said, none of these options make sense to me. None of these options financially, because I've been educated with the private banking blueprint. I was like, no, I don't want to burden myself with this type of debt. But let me show you how powerful your habits and your conditioning is, right? At the end of the day, I drove off that lot with my Subaru. The payments were just under $600 a month. And I was like, I really like the car, but I did not like the terms because I understood the financial impact that it made on my household. And so utilizing the concepts that we teach in the private banking blueprint course, I was able to buy back the loan from Chase Bank, recapture the interest payments that would have gone to Chase Bank. I kept them cycling inside of my household, and I'm actually paying the monthly note back to myself. That's how you bank on yourself. That's how you think like a bank and create opportunities for yourself. And so, with that information, we definitely want you to get with the person that shared this information with you, because now it's stress free. I know that I'm in a situation where money is working for me and I'm not working for money. And we want the same for you. So definitely get back with the person that shared this information with you. We're so excited to have an opportunity to work with you and help you and your family. And I look forward to meeting you sometime in the future. Always be compounding.